Economist here. So, let's see. Let's talk a little bit about lumber before we get started here on today's video. Lumber prices have really dropped dramatically. I think at one point I saw them down at around like 366 per thousand right now. This is incredible price considering the 1700 per thousand that we had experienced just a few years ago. So down at 366 per thousand, this is like incredibly normal price. Now, I was just kind of looking at some of the different futures price. Now, if you think about like lumber futures and really what that means for pricing, because really lumber futures are really contracts that take place every couple of months. So like right now we have the March contract, which is due here in a couple of weeks. It's due on the 15th is when that one closes. But then the next one isn't until May. But if you look at the May contract, we're up at like, I don't know, over 500 per thousand, if I remember right, which is a huge spread between, difference between the 366 that we were experiencing on the March contract and, five, whatever it was. I think it was 520, if I remember right, on the May. I mean, that's almost a $200 per thousand difference. That tells me that people are looking into the summer and thinking that there is going to be some serious demand taking place. That's the only reason why I would see such a major disconnect on these two prices. Now, obviously, the closer we get to the actual May closing, then that'll tell us a little bit more about where the pricing is going to be. But right now, lumber is dirt cheap. I mean, we haven't seen it this cheap in years. I mean, years and years. Same thing with plywood. Plywood is incredibly inexpensive considering what the high price was of $80 a sheet. We're down at 25. That's not going to last long. There's a lot of talk already about lumber or plywood prices starting to inch their way back up. Now, they're not like going crazy and there isn't a whole lot of demand out there screaming for the product. So I can't imagine that we're going to have like a run up in plywood prices. But right now it's a tight inventory, and just give it any kind of serious demand going into that, I just don't think there's going to be a whole lot of inventory in the system to handle it. Now, I'm not going to go any much deeper into lumber because really I did a interview with Keta from Madison's Lumber Reporter, and she has so much good information. It's just incredible. Like, I, I am just amazed by how deep the conversation actually goes into the different topics of when it comes to lumber. I mean, there's a lot to look at. So I'm gonna post that one on Monday for you guys to watch. So anyway, keep an eye out for Keta's the interview I did with Keta for the Madison's Lumber Reporter. Excellent interview. Let's talk a little bit about the article that I leave down in the description for you guys. It's a Zero Hedge article, but really it's quoting a Bloomberg article as well. And they're talking about some of these major mortgage-backed securities of some of these bigger projects, like major real estate projects, like big office buildings kind of style things. These are happening. Like, this is just one example of what I'm having, or what I'm believing is going to be taking place on a much bigger scale going across the entire nation when it comes to some of these bigger projects like this. Ultimately, they have defaulted on the mortgage-backed security, meaning that the bondholders, the mortgage-backed security is like a bond. The investors who had purchased that mortgage-backed securities, they're not getting made whole again. They have been defaulted on, so meaning that they are not going to get that money. And so now what happens, right? How do you figure out, how to sell off the assets to make them, at least get them some money on their dollar, a few pennies on the dollar, whatever it ends up being, something to make them somewhat whole or partially whole again. Now, this is really where like the excitement starts to take place, is this defaulting of these mortgage-backed securities. Now, in my mind, what I get to thinking about is it's not so much the mortgage-backed security, which is a really big deal, because you got to think these mortgage-backed securities are a bunch of real estate properties that have been put into a bigger investment for investors to buy. So it's not just like, one person buying into it, and it's not necessarily just one project that's going into it. It's many loans creating these mortgage-backed securities that end up being defaulted on. However, what the question that I really start to ask is, what about the credit default swaps? The insurance policies that cover these mortgage-backed securities. Because if those mortgage-backed securities default, generally there's an insurance policy, that credit default swap, that ends up paying whoever bought it. Like, typically the investor who bought the mortgage-backed security would also buy a credit default swap in case that mortgage-backed security defaulted, then the credit default swap would make the investor whole again. The whole point of investing isn't necessarily to make money. I mean, it is, but it's absolutely do not lose money. That's the key to it, right? So making money is the goal, the key, that's what everything is about, but definitely don't lose money. And that's where this credit default swap kicks in. Now, so now my conspiratorial mind, this is how it starts to spin on this stuff, because what I'm thinking is like, okay, there's no way that these people didn't know that these things weren't going to default, right? Like they had to have had the idea that the interest rates are going to rise into the future at some point, and they are going to have to deal with the defaulting mortgage-backed securities, or at least the issue of it. So now, if you're this again, I don't have any information on it. This is completely speculation on my part, but I think it might be going down something kind of like this, in that the investors or the people who have created these instruments of debt, these mortgage-backed securities, and then also on top of it have purchased the credit default swap. Now think about what could happen here. You've purchased this this mortgage-backed security, this debt instrument, this investment, so to speak, and now this investment is going bad, right? I mean, it's just like it's not worth anything, which causes the credit default swap price to go way up. Okay, you see what's happened here? So you have this project that's failing, but yet you have this insurance policy that's doing quite well at the exact same time. Now, these projects haven't necessarily gone completely like kaput yet, right? That it's not like over. There's still some issues that could come up as far as making the investors whole or keeping the project going or something like, extending out the loan, like, renegotiating it, something of that nature. That could still take place, but these credit default swaps are now quite expensive. So now, again, my conspiratorial mind, I'm not saying this is actually happening here, but this is something that could happen, is that when those prices fall, the investor who had these mortgage-backed securities, who also purchased this credit default swap, now can sell the credit default swap for a premium, right? Get it out of there because of this failing project. And then if enough of these failing projects start spreading across the entire nation and it turns into a systemic problem, the bailouts could start taking place, right? Whether maybe the government ends up buying some of these, crappy bonds or these toxic securities or something, like the Federal Reserve starts bailing them out and starts adding like a buyer to the mortgage-backed securities, right? Because they're bailing them out, like back when they did the toxic mortgage-backed securities back in the day when the great financial crisis was taking place. So imagine something like that taking place again, right? So now the investor has sold off the credit default swap for a high price, and now the Federal Reserve is going to like, well, we can't let all these toxic securities just be floating through the system, so we're going to take those and put those on our balance sheet by going back into the quantitative easing and bail out these projects. You see where I'm kind of getting at? So now the investor is made like one again, right? So hey, you had a failing project, sold off the credit default swap, get bailed out by the Federal Reserve and win again. I mean, that's kind of like the story that I think is probably going to end up playing on this one. Anyway, complete speculation, but as far as what's happening there, but the reality is that these mortgage-backed securities are defaulting on. So there is issues that are going to take place. How deep those issues go, we still got to find that out, or how much this could actually spread. One of the things that takes place is in this derivatives market, these credit default swaps, nobody knows how big that market is. Like that's done in like the shadow banking system. It's like one of those parts that like the Federal Reserve can't really see it. Like they don't know how big that is, that how many credit default swaps have been issued out there for all that stuff. It was one of the reasons why the great financial crisis was as bad as it is that when these credit default swaps started to kick in, companies like AIG needed to be bailed out, and because there was like, all these insurance policies that needed to be paid. Quite interesting times we live in, isn't it? Thank you guys for the super chats. I'm going to be out here till probably 5:30 or so. So we got a few minutes to hang out. Let's see here. Greetings from Palm Desert, California. Well, thank you very much, Johnny. Glenn, good evening, Simon. Well, good evening. Hey, Lumberjack Landlord. Nice to see you here, Matthew. Yes, live, baby. Fourth Industrial Revolution. Yeah, I could believe it. All right. Love you, Simon. Well, I love you guys. Stiff for plywood. Happy Friday, Carman. Well, thanks for being here. All right. Friday night UE. Woo! All right. Amazon is starting home loans using company 401 stock options. Wow, that's a new one. I hadn't seen that one. I'm gonna have to look that one up. All right, nobody will be defaulting on their mortgages this time around. Rent is more expensive than a modest house payment at 3%. Yeah, I believe that's the case on on most areas that you're finding, but these cases are starting to come up, right? These luxury apartments that are finding hard time to, having a hard time filling the basically filling the apartments up, so they're starting to lower their offer on these rents, which again is starting to create an issue with the loans themselves, as like if you can't create the cash revenue for the loan to be made whole. Am I saying this right? Like if you can't, if you take out a loan to build an apartment and you speculate that the idea that you're going to be getting certain rent out of that apartment, then the loan is valid. But if you can't get that rent, then they're basically saying, hey, this loan is no longer good. You need to be made, you need to either pay up on this loan or put more money down or whatever till those rents can cover the loan. Did I say that right? I think Lumberjack Landlord would probably explain that one better. All right. Let's see here. Yes, sports, but commercial is different. Yeah, sorry, post poop. All right, the infamous NYC. Thank you very much for the $5 coffee on me. Well, I appreciate that, man. You know how much I love the coffee. I can see commercial going under with work from home movement and businesses just shutting down. Yeah. Yes, exactly. Finally caught you live. Right on. You are the best. Well, thank you so much. Thank you for being here. 30-year loans at 7.4%. Yeah, I saw that. Isn't that incredible to think? And now what's going to happen? At least this is what I have a feeling is going to end up happening. You're already starting to see it, because like the amount of loans being written has dropped dramatically. Now, what happened like a few months ago, right? We had this spike in people taking out mortgages. Like everybody, it was like you had the news articles coming out. It was just like, wow, this huge spike, and people like rushing out there to take advantage of the interest rates drops, which doesn't seem like, there was that big of an interest rate drop that would actually cause a spike in mortgage applications. But that's really what happened, right? They had spiked back in like what, October, November, and then they slowly kept, well, not necessarily slowly, it just kept going steadily down until, it reached the point where the Fed was like, hey, we're going to be like lifting, I got to stop saying lifting. We're going to continue to raise the interest rates, and it freaked everybody out. And then, U.S. Treasury started to increase on the yields and stuff like that. And then all of a sudden you see these mortgages moving up. Well, at that same time, you have to think, so as the demand for mortgages started to increase as the interest rates were falling, that was more mortgages being written. When those mortgages get written and then get out into the system, eventually they get packaged up into the mortgage-backed securities and get dumped out there into the market for investors to buy. If there's less investors or more mortgage-backed securities, supply and demand, right? So if the investors are there and all of a sudden the mortgage-backed securities increase, right? There's a volume of them because all these applications just started pouring in and people got these mortgages. Well, then all of a sudden you have a rise in the amount of mortgage-backed securities that are available out there. If there's more mortgage-backed securities, less investors, the price starts to fall and the yields start to rise, which is what we're experiencing now. So I could only assume, give it some more time, and these investors out there who are looking at that yield of, whatever the mortgage-backed security is paying, and they're saying, hey, that's actually not a bad price, a good yield, that, a fairly decent return on these mortgages. I think that's our price. Well, eventually they start pouring in, right? Where the yield starts attracting the investor. Well, if the mortgage-backed securities continue to rise, that's exactly what's going to happen as far as the yield goes. The investors will pour in, and then the yields will start to fall down again, and then the people start pouring into it again as when the yields come down, that gives them the buying opportunity to make cheaper payments on a more expensive house. Did I say all that right? So anyway, that's kind of how I feel that we're going to have the rise and fall of the mortgage rates, not necessarily going off of what the Federal Reserve is doing, definitely off of what they're saying, but more off of like the influx and then backing away from the mortgage applications that are taken off out there. I think I got that right. Anyway. Thank you so much, Matthew, for the $5. It's not a conspiracy, it's truth. Commercial real estate is deep poo, is in deep poo. Lots of debt resets, 300 to 400 basis points over current rate. Man, that's going to be a killer. It's going to be a killer on them. And that's really where I think this theory of mine is really starting to play out. Like, how could you not know? I mean, you have to have these projections. Okay, well, if the interest rates go to 5%, it's going to be this. If it goes to 7%, it's going to be this. I mean, you have to have this idea as an investor, right? You would think about that. Like, I mean, this is your money. You wouldn't be like, man, this just totally caught me off guard. I mean, if that's the case, then you deserve to lose your money. So, I mean, to me, there's a game plan inside of this. They're like, okay, so if the interest rates go way up, it's going to cause the property value to go way down and the insurance policy to go way up. We'll sell the insurance policy, wait for the bailout, and we get all the money in the end anyway, right? I mean, I don't know if that's going to happen. I'm just guessing. But all right. Over the current rate. I mean, okay. That's why nobody is buying houses right now. There isn't a lot of supply and almost no demand. Please smash that like button. He's worth a thumbs up. Well, thank you so much. Yes, please do. We got 159 of you in here. 41 thumbs up. We can definitely get 100 thumbs up before I have to go. I still got at least another half an hour out here. Okay, PJ Cornell. I missed a, what was it? Up and away in my beautiful balloon. Right on. Okay, PJ Cornell, $5. Thank you so much. What percentage of young adults living with their parents would buy a house if the price to own fell 25%? Now that's kind of like, I mean, that's a very like open question on it, right? How many people living with their parents, right, would be able to buy into a house if the price dropped 25%? I mean, you got to think, why are you living with the parents in the first place? Like, if you're living with your parents, you got a job, you're making a lot of money, like the video we talked about the other day, you're 18 years old, now what? And I was thinking, hey, if you got a decent paying job and you lived with your parents and you're able to save a ton of money, well, then, yeah, that's going to put you in a pretty good position, right? But most people aren't that way. Like, most people are living paycheck to paycheck. They don't really have a savings, and a 25% drop in a housing price probably isn't going to do a whole lot for them, right? I mean, I don't know how that would benefit. Like, it might benefit like an individual, like, an individual person who's done quite well for themselves. But generally speaking, I don't know how that's going to help out anybody out there. I mean, not, because you got to think, if the price is coming down like that, that's probably because there's not a lot of people out there who are doing a lot of economic activity. And if there's not a lot of economic activity happening out there, there's not a lot of opportunity. So unless, again, you're already established and well established, like just trying to be like the casual, regular, everyday, general person out there participating in it, I don't know how that's going to benefit you. You got to do something extreme. That's why, if you're looking to get into real estate, you got to follow like guys like, Matthew, the lumberjack landlord, talks about house hacking and how, like, the individual person can get into real estate. It's not something that's impossible. I mean, it's definitely something that is possible even in today's market, even the way things are going. You got to have a game plan. You got to have a strategy towards it, and you got to follow that strategy through. Otherwise, if you're just flying by the seat of your pants, you're probably not going to do very well, All right. Hello from Las Vegas. Great question, PJ. Yes, it was. Wall Street is in a town, Wall Street is in at down 20 in most markets. I was talking to a car dealer today. He said more and more vehicles are passing through the auctions that have been repossessed. Yeah, I mean, you're starting to find that taking place more and more now. I mean, you can even just look at the articles of it, as far as repossession goes of new vehicles. Not a surprise, right? To me, that's not a surprise at all. Like, everybody got real excited. They got the stimulus check, and they're like, man, I'm going to go out there and get me one of these new cars, right? And everybody was real excited about running out there and getting a car. Working a regular job, working class people, when we were living paycheck to paycheck, a car payment is one of the most, like, you love the car when you first get it. You're like, man, I'm so happy with this car. It's so nice. Smell it. Oh, God, this is great. You just love this car. And then about 8-9 months later, you're like, I'm sick of these damn payments and the insurance and the gas. And it's just like, right? You get real frustrated with it. And these car payments are one of the most burdensome things out there because all it is just a luxury item, right? $500 99 Toyota Corolla does exactly the same thing as a brand new Toyota Corolla does. Doesn't look nearly as cool, probably isn't as fun to drive, whatever, but in the end it does the exact same thing. A to B, right? That's where you're going. So yeah, I can see where a lot of people are going to end up giving up that car just because of how tight things are. All right, happy Friday. Hey, hey, from Sweet Home, Alabama, right on. Well, it's nice to see Sweet Home here. Here from Oregon, but you wish you were here. All right. I'm wondering to what extent there is untapped demand out there. Untapped demand. Well, I mean, you got to think, where does the demand come from? It comes from purchasing power, right? That's ultimately where it comes from. So now, if you can get a return on capital investment, right? Like back in the early 80s, if you had $1 million that you could invest with the U.S. Treasuries, you could take home $150,000 a year and be able to spend that back into the economy. So if you have a return on capital investment, that's like, some pent up, demand there. If you have access to credit, like all of a sudden they drop interest rates and, available loans become easier to pay, well, then that's like demand, like, right? That's pent up demand if you can just drop the rates. If you have a savings, right? Savings out there somewhere, then that would be like some pent up demand. But where's the demand going to come from if you have a slowdown from economic activity, employment? Like the return on capital investment takes years to happen, right? You need to put the money in there and then it needs to sit and actually work for a while before you can get that return on the capital. Right? Those things take forever. I don't know where the pent up demand would come from. Like that's like it would have to come from a dropping of interest rates to get people excited about borrowing money to go out there and spend that into the economy. That's where I think like the pent up demand would come from. Right now, in my opinion, what we have is the Federal Reserve trying to bring the demand down. At the same time they're doing that, they're kind of screwing with the supply and they're bringing that down at the same time. So all this is coming down together. Eventually it'll hit a bottom. At that point, yeah, it's going to be like a lot of economic activity could be taking place at that point. It's probably going to come after a lot of bankruptcies and a lot of defaulting loans and stuff like that. That's the burning out of the bad debt, the burning out of the undergrowth. I mean, this is something that the Austrian School of Economics talks a lot about. Once you burn out that bad debt, all that dead undergrowth, right, then things can flourish and grow again. So this is what they're doing. They're like basically they're setting like it's a controlled fire essentially. Like let's get rid of this bad debt, and you're going to start seeing a lot of defaults. You get rid of the bad debt by raising those interest rates up, and they don't even really like. They're not even like raising the interest rates. They're just allowing the interest rates to go find normal, right? To go find where the market would really want them. If they let it go, I would imagine the interest rates would be incredibly high. If you were to just let the free market establish it, but well, that isn't going to happen. Yeah. All right. Love your show, but rarely catch you live. Well, thank you very much, PJ, for being here, man. They have no credit either. Yeah. Crazy how we have to bend over backwards for a house nowadays. Easier to own multiple homes than to buy a first home. Yeah. That's true. And I don't know if it's necessarily easier to do it. I mean, I think like easier to do it in the traditional sense. Yeah, no. But there's a lot of ways that you can get into real estate, even today, even the way it goes. You just really have to be creative and you have to have that strategy. You have to know your game plan and be ready to do it. Yeah. I mean, this is what, Lumberjack Landlord talks about relentlessly on his channel. All right. And one rental at a time. Michael Zuber. All right. Do you think a lot of people will lose their programming jobs to chat GPT? I would imagine, like, I don't know. Like, I don't know what's going to happen with the employment and stuff like that. I would imagine that there's going to be a lot of layoffs across across a lot of the industries out there, not just tech or whatever. It's going to be a lot of the industries. And, mainly just because, like, the slowdown of economic activity happens throughout all channels. Like, I mean, it's not just going to be like housing slows down and you don't have to worry about, something else over there. If housing slows down, that's a pretty big economic indicator of what kind of activity is going to be happening throughout the nation. I mean, think about the production of a house. Like, if you're a nation that produces and sells things out there, you produce like cars and you sell them to the rest of the world. Well, that's one thing, right? But think about a house and its production and what that really means, because a house is like pretty much 100% American made. Like, there's foreign like components to it, but for the most part, the material came from the United States, the labor's United States, everything about it is all within the United States. So if there's a lot of housing manufacturing taking place, that's like one of the US major manufacturing industries is housing and construction and all that other stuff. So if that slows down, think about all the residual stuff, all the restaurants, all the, equipment, all the stuff that goes with it. There's a lot of economic activity that just comes from building a house that spreads out into the rest of the economy. And if the housing slows down, the rest of the economy is going to slow down too. I mean, I'm talking about new construction. All right, they say the first million is the hardest. Same concept. Yeah. Economic Ninja YouTuber tries to interview a lot of car dealership people. Not a lot of people are willing to talk, and fear of letting the cat out of the bag. Is there a secret? I mean, okay, so the cat out of the bag would mean like there's a secret out there, right? And like, it's funny because I talk to a lot of people in the lumber industry, and like there's some people like I talk to who don't want to come out on video, like they don't want to come out on YouTube because they're like, they don't want to expose themselves to the world, and that's totally understandable, right? Not everybody is willing to do something like that. But everybody I talk to, there's no secret. There's no like, hey, keep this, don't let anybody know, right? We don't want anybody to find this out or anything. Well, no, everybody's just like straight up open. Hey, man, this is what we're doing. This is what's going on. These are what, the experiences that we're having. There's nobody who's going to be like, I'm not going to say any more than this because I might get in trouble. I mean, I've never heard anybody, like, even in the lumber industry, say anything about that. Now, what's funny about it is down in the comments section, you will find all kinds of comments about conspiracy theories and how they're manipulating and doing all that other stuff. But yet, I've talked to, like, some pretty high people within the lumber industry. I can't find any manipulation whatsoever. Now, I do see a lot of disruptions, both from, like, natural disaster stuff going on up in the British Columbia area. I see a lot of issues taking place from the COVID lockdowns, which is kind of a manipulation, but it wasn't done by the lumber industry. That was done by the government itself, telling people to not produce and manufacture and stuff. I mean, there's a lot of manipulation when you think about the stimulus packages coming out that dumped into lumber as well. All those kind of conspiracy manipulations, yeah, I can hear that, but there wasn't, all the mills didn't get together and go like, hey guys, we got a plan to send lumber up. And that didn't happen, right? That didn't happen no matter how much people want to believe it. And if you think it did, I would love to find the person who could tell me the exact story of how that happened, because everybody that I've talked to in the industry, and I've talked to some pretty high level people within this industry, I can't find that. I cannot find that manipulation thing that took place. The lumber industry was exactly how I told it, right? I mean, I've been reporting on it every week for 45 years, whatever it is now. Not 45, for 4 or 5 years. There we go. And I mean, it's what happened, right? British Columbia, bug infestation, economic impacts, supply chain breakdown, stimulus packages, inventory depletions. It all took place. That's what happened, right? All right. Did I get another super chat? I did. Thank you very much, PJ, for the $5. Chat GPT obsoletes. Absolute, what is that? Obsoletes? Gosh, I can't hardly read. Every NPC influencer. Obsoletes every NPC influencer. Now there will only be right-wing influencers. Now and they will compete with Chat GPT. I wish I knew more about that stuff. You guys seem to know a lot more about that than I do. Hey, all-nighter, it's good to see you up in here, man. All right. Charles Consumer, Charles, do you have a clue? Okay, let's see. All-nighter, y'all doing God's work. Yeah. All right. Pulse chain, baby. I think we're headed for a good times, to be honest. I think people are hoarding cash and paying debt, just another cycle. I don't think people are hoarding cash. I mean, I think there's a handful of people who are hoarding cash, but the idea of like the dollar losing value, the inflation scenario, right? Cash is trash. That has run so prevalent through the people right now. I just don't see where they're like, man, I want to keep me a stack of cash right now. The mainstream media has pushed it out there that if you're holding cash, you're an idiot or something, even though that to me is the smartest thing you could do because your buying opportunities are coming and you can't do that unless you have cash. But most people have this idea that the dollar is worthless and you shouldn't hold on to it. Now, I could be completely wrong on that, but that's the perception that I get when I talk to, like, everyday people that, when I ask them about like what they feel is happening in the economy. That's what everybody says. Cash is trash, inflation is killing everybody, and there's no point in holding on to your dollars. Like, so I don't know if there's people who are stashing cash. I mean, I'm sure there are people, but I just don't think it's a big amount of them. I'm just scared of nukes. Why? Don't be scared. Don't be scared of something that you can't control like that. That is not anything to be fearful of. Like, what are you gonna do? Sit here and stress about nukes? I mean, what are you gonna do about it? Like, I mean, if you're gonna stress about something that you can actually change. Right? I mean, something that you can actually do about it. If it's something like a nuclear weapon, you got to figure out, you got to do some meditation to figure out how it is that you're not going to think about nuclear weapons anymore because there's absolutely nothing you can do about a nuclear weapon. I mean, just straight up, right? I mean, you got to think about things that are more local to you. Think like, I mean, it's okay to think globally, but act locally. Like there's unless you have a nuclear weapon in your backyard or something like that, then there's no point in thinking about that stuff. Act locally, go and, take care of the people around you and forget about the nukes, man. I mean, what are you going to do? You can't run away from it, I mean, it's just like, stress for nothing. All right. Rick saying, nah, no, that saying comes from California. I was just being cute. Okay, are you calling a recession or a recovery? Well, the recession I don't think is going to be like what a lot of people are anticipating a recession. I mean, what was like, if you think about recessions from the past, what was the worst part about a recession that everybody remembers, right? You lose your job and then the corporations get bailed out, which just pisses everybody off, right? So not only do you lose your job, but the corporations get bailed out. Everybody hates recessions for that thing. Now, Janet Yellen said she didn't think that we would ever have another recession in our lifetime, which absolutely does not make sense. We've gone through countless amounts of recessions in this country. I mean, we go through one like every 7 to 12 years. So to think that there would never be another recession was like almost an idiotic statement, right? But then you get to thinking about this. It's like, well, what does she really mean by that? Like, here we are rolling into a recession, and yet we have this hot, like, incredibly low unemployment number, right? So there's plenty of jobs out there, and it's not like a lot of people are unemployed. The reality is a lot of people are unemployed. But if you look at the numbers that the government issues, whatever you want to believe them, unemployment is low, right? And at the same time, these corporations are sitting on a bunch of cash that they got during the pandemic when they had the special purpose vehicles bailing out all the corporations. They had these special purpose vehicles set up to do the corporate debt lending facility, right? That little facility right there dumped lots of money. Now, the facility itself didn't, but the perception of the facility got the market to start dumping a lot of money into junk bonds and bailing out these corporations, thinking that they were going to front run the Federal Reserve. All right, so now the corporations sold a lot of debt, cheap debt, right, to the market. The Federal Reserve hardly did anything. They said that they were going to do it, but they didn't do anything. They just sat there and watched it happen, right? So now the corporations got to basically borrow a ton of money, a lot of money at really cheap interest rates. And now they're sitting on that cash. A lot of corporations are failing because they were zombie corporations to begin with. And without ever increasing amounts of debt, then they'll just fail anyway. But the viable corporations, they got the cash. They got the cash cheap. They got bailed out, right? And they're sitting there waiting with this cash, being able to make their payments with it. At the same time, the people aren't like suffering with a bunch of job losses. So really, even though we're rolling into recession right now, there's no real like appearance of a recession when you think about having to bail out the corporations, right? Now, let the bad corporations, they're going to fail, right? Due to the the rising of interest rates, right? Those guys are going to fail, and everybody else is going to have a job to go to, right? Even if it is just a service job, it doesn't matter, right? I mean, whether you go from a tech job to a service job, it's not really like counted as whether or not you had a good job or a bad job. It's just if you have a job, right? And that's really what's going to happen, in my opinion, right? So yeah, Janet Yellen may actually be right. We'll go right through this recession without having to bail everything out, because we already did that, right? We already bailed everybody out. So you just get to suffer with the pain and no bailing out, and then go on to the next boom. So yeah, we're in a recession, right? We're in the recession, but we're not going to have a recession, whatever that's supposed to mean. Did I explain all that right? I don't know. All right, individual actors. People hardly agree how many genders there are. Yeah, that's so true, man. It's just crazy to think. Okay, I'm going to be out here for about another 10 minutes, guys. Charleston Zimmer. I sent 3 loads from Florida to pollinate almonds in California. Nothing good in California. Had real trouble selling my apartment in the Northeast. Every potential buyer was unable to be approved due to credit problems. Finally, a cash buyer. Of course, they are foreign. American adults cannot save. I can't really hardly disagree with that. All right. Good to be seen. What's up? Hey, Jaws. Good to see you here, man. Just an algo hit. Watching a movie with the kids. We'll watch later. We'll go and enjoy that movie with the kids there, Jaws. Big changes coming to George Gammon's channel. Big changes coming to George Gammon's channel. Well, I have to go check it out. I haven't been over on George's channel for quite some time, so I'm going to have to go check it out and see what he's got going on. All right, buy more gold and silver. Yeah, if you didn't catch the interview that I did with Lynette Zhang, I posted that this morning, so go check that out. She does a great job of breaking down all the currency cycles and everything that goes with it. But I tell you, it was the very end, like the last 5-10 minutes of that interview. Really good stuff. That's where like the new information that I was really hoping we could have like touched on. I didn't even know she was going to bring it up. But it was like I was trying to end the interview, and then she brings this topic up, and I'm like, "Oh, Lynette, you can't leave me hanging here. You got to keep going for a little bit." So she gave us a little bit more into the interview. But good stuff. Go check it out. Cash is for harvesting opportunities. That's exactly right. I love All Nighter's comments. He has the best. All right. The thing with GPT is it takes a human to enter a prompt. People who are skilled at prompt engineering will get ahead. I can't believe I-bonds aren't what everyone is investing in right now. 6.89% for 6 months right now. You have to hold for a year, but find something guaranteed like that. Yeah, that's true. I mean, that is a really good interest rate, and for a guarantee return, that's not bad. But I also have to think, like, okay, so you're going to tie your money up for an entire year to do that, right? You're going to get like 7% interest, well, 6 point whatever, but let's just say it's 7%. Well, I think about it. It's like, okay, so if you tie up 10,000, like $100 is $7, right? 10,000, $1,000 is $70. $10,000 is what, $700, and then $100,000 is what, seven grand. All right, so $7,000 that you get for a $100,000 investment within those U.S. Treasuries over the course of the next year. Now, that's not bad, right? I mean, like a $7,000, that's a lot of money, but to tie up $100,000 for it without being able to invest in something else or another buying opportunity, I don't know if I would take that. I mean, remove the risk only to not be able to take that risk. I mean, I don't know if I would necessarily go that route, especially with things are today. Now, if you got like $100,000 you plan on doing nothing with, like not even investing it or something, then yeah, that's a killer, right? Go into treasuries. It's a great place to put it because you're going to get 7 grand out of it. But if you're thinking that, man, I don't know, there might be something else I could do with this money, I don't know if I would tie it up in a treasury, and not for a year. You know, like if you're thinking long term, you know, kind of compounding it and stuff. Yeah. All right. Let's see here. All right. Thanks, Joe's okay. Defengo put out a good chat GPT video that a Generation Xer could understand. Hey, I'll go check it out. All right. Learn how to deal with nuclear fallout. Knowledge empowers. Yeah, I mean, well, and that's just the thing. Like, if you understood maybe some of the skills that you would need in order to deal with the nuclear fallout, then maybe the nuclear event wouldn't be so scary, right? I mean, you're just scared because you're just worried, like, you know, okay, so you, like, okay, if the nuclear bomb hits you, then what are you worried about, right? A millisecond of brilliant light, that's it? Okay. So what you're really worried about is it, like, hitting someplace far away, and then you have to deal with the aftermath of that, right? And there isn't going to be nuclear weapons. As soon as a nuclear weapon goes off, everybody starts launching them, right? If you haven't seen the movie Doctor Strangelove, go check it out, right? I mean, it explains how it won't happen. All right. Or if it does, it'll destroy the entire world. All right. Happy I received notification of live stream this time. YouTube algorithm doesn't show your streams in my interested selections sometimes. Yeah. Well, you know, the YouTube algorithm was really messing with me there for a while. Like, I thought for sure it was like, okay, so YouTube turned me off. They just don't, you know, they don't have any love for me anymore. But then I put out a video that got 310,000 views, and I'm like, holy moly, I got 3,000 new subscribers in a week from it. So it's like, okay, thanks. You know, thanks, YouTube. I appreciate that. So thank you if you're new to the channel, too, for coming and checking out the Uneducated Economist and subscribing. I really appreciate that, guys. Okay. The economy is toast. Yeah. Good call, Jordan. Garbage in, garbage out. All right. Okay, I'll give it a few more minutes here, guys. Same here, Joe. YT is constantly inconsistent. Yeah. The cash is trash talking point is for the people who have at some excess amount of money in the bank account just sitting idle, and they want to get the money moving so it can be taxed. Yeah, I mean, that's definitely, you know, one way to getting it is to, you know, is to create that situation in which that people believe, you know, on a mass scale. Like, if you believe that there's going to be major inflation or shortages or something coming into the future, well, that gets you, like, excited about it. Like, oh man, I got to go run out there and take care of business before it all happens, right? So that actually is a self-fulfilling prophecy of creating an inflation. Like, oh man, you're not going to get any, and then everybody runs out there and then takes it all off the shelf, and then there isn't any, right? So they create the actual shortage. Don't stress too much. A Patriot missile can shoot down a nuclear missile. Ironically, even as automobile and AI expand, we could continue to have a labor shortage because of the low birth rates and how expensive it is to build and maintain robots that replace general labor. Oh yeah, I think that's going to be a major issue coming into the future, is going to be labor issues. You know, just the whole like birth rate falling and stuff. I have been doing a lot of research into this particular topic and trying, because like once I started reading it through Cantillon's essay and understanding how it's more an economic event that creates the low birth rate, not society, not governments, not anything like that. That's not what's doing it, right? I mean, it's a societal thing, but it's really because of the current environment within that society, the economic environment, right? Not necessarily like the behavior of society in itself. Like, you can't say, well, attitudes of this nowadays are preventing this, you know, this from people having births or creating the low birth rates. It's not the attitudes of people. It's not that, right? I mean, it is the attitudes of people in a sense, but it's not the attitudes of people like we all have this belief now, right? What's happened is that their standard of living is so elevated that bringing kids into life means that you have to lower your standard of living, and people really don't want to lower their standard of living. So that's what you find is that advanced civilized nations, the Western nations, anybody who's increased their standard of living, the societies who have low birth rates, right? Because they don't want to lower their standard of living. In fact, I was just reading an article like out of this South Korea. this like particular province, this little area, whatever, has one new first grade student in the entire school, just one, right? And they had this big ceremony for him and introduced him to some of the older kids in there, but he's the only one in this entire area. Like nobody's having kids, right? And so like I think about this a lot, like how is this going to impact the rest of the economy as this continues to go on? Well, you're going to find that the nations that are producing and having kids, they're going to start leaving, right? And they're going to start finding their way around the globe and stuff. And you're going to find that, you know, just the cultural experiences and things are going to start changing within society. And I mean, of course, this takes like decades and, you know, a long time to eventually happen, but it's occurring. It's occurring right now. It's very strange to try and think like what is this going to lead to, because of the all the technology that we have nowadays is going to give people the ability to live without families, right? And that's typically wouldn't happen. Like before, you had to have a family unit. You need to have somebody that could support you or help support, or if you fell in bad times or whatever, they could, like, you know, there was that network of family that could help carry you along. Well, that kind of whole thing is kind of falling apart. Like family formation's falling apart, the connection is falling apart, and everybody lives as an individual now. So like society is going to gear things for the individual person. Like you won't need to live in a house, you won't even need to own a car, you won't need any of this stuff. All you'll need is a place that you can just lay down for a few hours to rest, and then your phone will provide you with everything you need, all your food, all your transportation, everything, like, you know, everything you would ever need. You just punch it into the phone and then it would just show up, right? And that's really where I think society would end up heading to if we don't have that family formation thing taking place, which I don't see how it's going to happen. So, you know, it can only really go one direction. And that's really it that I see is, like, you know, the rise of the individual and not everything being shared. You know, like you don't own anything, like, because it's the whole own nothing, be happy. That's the reason why. It's because if you don't have a family, then why do you need to own anything? Like if you don't have a house, why do you need furniture? If you don't have a car, the only thing you really need is clothes, right? Clothes and food and a place to stay. And that's really where people would be most convenienced, actually, is by not having any of that stuff, but yet it's provided to them. So people are begging for it practically. Right? Nobody wants to work hard. I mean, think about how hard you have to work to try and own a house. Think about how hard you have to work to have a family. You know how expensive this is? You know how much it drags out of the individual to try and do something like this? Why would they do it? There is no reward for it, right? And you think about it right now, when you look at like the case for a lot of men out there, they are punished so bad if they cannot keep it together. Right? So you've put this whole family together, and if you can't keep it and the divorce happens, it's devastating. Like it's very, very difficult for a man to recover from that. So if it happens enough, then you're going to have a bunch of young men who are watching their fathers, their uncles, their older brothers, everybody else going through all this hell, trying to do a family formation. They're going to be like, I ain't going to start no family. I ain't going to have no kids. I ain't going to do any of that stuff. Now look at what you guys went through. You know, that's what's going to end up happening from it. And then if you don't have any ambition to have any of that stuff, then why would you work hard? Like, why? Men bust their ass because they're trying to be a provider, right? I mean, that's why they bust their ass. If you don't have to be a provider, then why go out there and do it? Like, why kill yourself? You're not going to kill yourself. You're just like, give me my UBI. I'm going to go hang out on the beach, go fishing, man. That's what I'm going to do. Yeah. Anyway, I'm just kind of babbling at this point. What time do I got to go? Oh, shoot, guys. All right. I got to jet out of here. I got to go and pick up my boy. All right. That's stupid thinking. Okay. Western society is 15% of the world population, and the future direction of birth is in major decline. All right. I bought a house last year, having a family this year. I'm 38 and I work 60 plus hours a week. That's what it takes, right? I mean, could you do it at 40? Ask yourself that. I mean, think about how hard or how tough it would be if you tried to do it at 40 hours a week. So now what are you going to do? 60 hours a week for the rest of your life? It's tough work, isn't it? It's hard to have a family. Eating government cheese, I miss, Farley. Steve Bella, it reminds me of my boomer dad. He says nuclear and robot instead of robot. Oh, robot. All right. Family formation is going strong except in white culture. All right. Yeah, first Japan, then Europe, then US, unless we say no. Greetings from the Humongous. Hey, Lord, it's good to see you here, man. Lord Humongous. Hey, Michael, thank you so much for the $5, man. I really appreciate that. Organized religion fixes the birth problem. I don't think so. I'm sorry. It does. I don't even have to apologize for that. I'm not saying I'm sorry. Religion doesn't have anything to do with it, okay? What it comes down to is an economic problem. When you have people who are content to live poor, right? Not people who become poor, right? If you become poor, you're not going to want to have kids. If you are elevated and you have a higher standard of living, you are not going to want to have kids. But if you are content, you were born into poverty, you've been in poverty, you have no expectations of getting out of poverty, you will have a lot of kids because you are not worried about deteriorating your life. In fact, it's only better from here. And the chances of your children having a better life than you are absolutely almost guaranteed, because death is the only thing that would be worse than what you have. So those people have lots of kids, and that's the case. Like, it doesn't have anything to do with religion. I as much as you want it doesn't have anything to do with religion. It doesn't have anything to do with the environment, like, you know, like environmental changes and stuff like that. It has everything to do with the person's standard of living and willingness to start a family. Men will breed like mice in a barn. Right? This is exactly what Cantillon says. Men will breed like mice in a barn if they are given unlimited means of being able to do so. Right? And that's really what it comes down to. If you feel that you can provide a life that's better than yours, then you will have a lot of children. Plain and simple. Right? And men want to do this, right? I mean, it's just like, it's a driver in them. Why else would they work so hard to try and create a situation that has a house, that has the everything within it to raise a family? Like, what is it that's driving men to do that thing, right? It's because men want to form a family. It's just in them. It's an instinctual thing. But if you take all the capabilities of making it not necessarily easy for them, but making it ever increasingly more difficult where they are punished for doing it, then the ambition for it just falls. It's just out of there, right? So anyway, guys, I would love to sit out here and just keep going, man, because it's been so much fun to hang out with you for the last hour, but I have got to go get my kid here in just a minute. He's not that far away, so I'm not going to be late, but man, thanks for your time, Car, man. Was fun as usual. Thank you, post-poop zoomies. All right, government fixes birth problems, send you poor ass back to the front war. Front of war, all right. All right, Gina, rules for life: stay out of jail, don't do drugs, education, or trades. If you marry, stay married, always be learning, honest, and ethical. You know what, all-nighter, I totally agree. That is a great comment. All right. Michael, $5. I get that, but belief in God is the most powerful. No, I will not argue with that. I will not argue with that the belief in God is probably one of the most powerful things that ever has existed within a human. So I definitely agree with you on that. All right, scholarships are taxable unless excluded by being used on qualified tuition. Keep track of those book expenses. No bankers' kids go to the front lines. Yeah, isn't that the truth, Lord? All right. Thanks again, Michael. Yep. Sounds like idiocracy. Okay. I want to be a polygamist. As a young man, I just run off passion for hobbies, could care less about family. Keep on keeping on, brother. All right. Thank you. Thank you, Lord. All right. Redazone, thank you so much for the $4.99. You guys are so. I mean, I could never thank you guys enough for it, but you are always so supportive of this channel, and I just appreciate it so much. I mean, you don't know how much you guys have changed my life. So, all right, thanks, Shannon. All right, God will defeat them. All righty, Lord. Thank you guys so much for being here. I really enjoyed this live stream tonight. This was a lot of fun. Go and check out Lynette's video. Go and check out the Keta video that I'm going to post on Monday. And then if you haven't seen it yet, I want to go grab the link and I'll put it down in the description of this video as well after I get it uploaded, to an interview that I did with Above My Pay Grade. It was a great interview, and I'd love to give that one a shout out to. If you guys could go check out Above My Pay Grade and go and like that video and show them some love over there, I'd really appreciate it, guys. Thank you so much for being here. Uneducated Economist, you guys let me know.